Welcome to Target the Trade. This is Fed Razak, Senior Trading Strategist here at CMTrading. And today we have a trading opportunity that is happening now and should continue to happen, and that's our goal in Target the Trade. But before we start, make sure to like, subscribe, and share, especially if you find value in this presentation. So the particular asset that we're looking at right now to trade is something called Alcoa. Now, Alcoa, what is it and why is it so significant? So Alcoa is one of the largest producers of aluminium in the world. Now, who uses it? So the aerospace industry does use it, including major airlines and major corporations that are heavy with aluminium use. And that also includes many other industries as well. So Alcoa happens to be at the front end, okay, at the consumer end, they're not even associated with, because the consumer end is completely at the end of the line. They're at the producer's end, which means that they're the front line of new production happening in the market. And that is why this company is so important and a major bellwether in the industry. Now, they've done some tremendous business over the past 140 plus years that they've been in business. And this is why it makes it such an important company to follow, not just in of itself, but also to give us some direction of which way the market is going. So let's just jump straight into it. So this is Alcoa back in 2020 when the markets tanked during Corona. Now you could see that pretty much it went down to about $6-ish on the chart. And it came back, okay, to $100. And this is what's so important about it, because there was so much backlog of shipments that things just kept on getting more and more expensive, which led to this massive pull up to the markets of $100. So if you put in $6,000 back here, you would have made $100,000. So could you imagine all the major funds that have major money in this at this area, how much more they made? Just as a side note, okay? But anyway, let's just jump straight into the technicality. Now, we've got three lines here. The yellow line is a 200-day moving average. When we crossed over, we used it as a support initially. We bounced off of it, and then we crossed over. If you look, the red line is the 8-day moving average. Once that was crossed, okay, over the 30-day moving average, that was your kind of change in the market space of looking at this from a strong stock to a weak stock. And then I'm thinking shifting from buying it to selling it. And that is exactly what happened here in a weekly. Now let's take a look at a daily chart. So you can see this is that part where it broke that 200-day moving average. And as we get closer here, you could see that it continued falling lower. And then finally, if you look at that support line down here, it broke that support line, which is $30 a share. Now, it's priced in the market as at $38 a share. However, once it breaks $30 a share, that's a psychological support area. And if it breaks 30, it could go to 25. And if it breaks 25, it could possibly go down to 20. So keep this in mind. This potentially can lead the market lower if we see more and more companies leading this way. However, we still have a very strong tech sector, so that might prevent us from going lower, but this may bring us lower, so keep that in mind. There's two sides to this, and just want to know all your options. And you know, the market never gives it to you. The market never tells you, oh, I'm going to be selling off now. But you get tidbits like this that then you could make and string the pearls together. Thank you for joining us to Target the Trade. We'll see you here next time.